All right, hey there. Good morning, everybody. It's a few minutes after 11 a.m. Central Standard Time here on Tuesday, the 7th of December, 2021. Less than 3 weeks to Christmas if you celebrate it. Coming at you live from Bernie, Texas, man. Looks like we got some sun peeking out through those clouds out there. Been a little cool lately. It's kind of funny to say, right? It's December. Been a little cool lately. But this is South Texas, so things are a bit different here than they are other places. Hopefully you guys are doing well. Esteban checking in first today. What's going on, man? Crypto Mowgli here as well. He says, hope everyone is doing well in a slightly better weather than down south in the UK today. Jared the Great, what's up, man? Nivlusians here, LXT. Chris Baker, good morning, my friend. Golddocker checking in. Brian Allen. And Data here so far. Good to see you guys checking in. Man, so a lot of stuff, going on in, just in the world of trading. There's a lot of people fearful right now of Bitcoin and other cryptos. I don't think now is the time to be fearful. We had that flush just recently, which sent price down, which made everybody fearful. But I think that bottom may be in. So, some things we talked about. So we'll take a look at that. Matic taking off a bit. And we'll talk about that a little bit. It looks like they're Sequoia India and somebody else there looking at potentially investing in Polygon by buying Matic tokens. So that probably led to that. What else is going on? Ethereum's continuing to do its thing. I saw a 2022 target of something around 27,200 coming in there. So that's kind of interesting, still doing its thing there. Anyway, if you'd like to join us, you can do so at howtotradetowin.com. We'd love to have you there. Tier 3 is just absolutely, man, this is so old up here now. We got so much going on, so much more than that. Well over 150 hours of recorded educational videos every week, 3 live streams. Mondays is Wyckoff, Wednesdays is tips, tricks, and techniques, where we show you rules-based strategies to get you trading immediately, even if you've never looked at a chart before in your life. It's got rules. It says if it does this, then do that, So you don't even have to think about it and screw it up. Right? That's the best way to do that, right? And then, of course, we've got Thursday's Elliott Wave. And again, the Monday and Wednesday, the Monday and Thursday, Wyckoff and Elliott Wave are really just to kind of help you guys go from theory to application when you're using those two things. Because when we learn it, we usually learn it with these really specific, perfect charts, right? Everything looks like it's so perfect. And then when you get in the real world, you're like, yeah, how do I do this now? So that's kind of what we do with that. So anyway, we'd love to have you there. Hopefully you guys will check in with that. Let me see here. What's going on, Brian Riley? Good to see you checking in, man. So, again, everybody fearful here. We had this drop at the end of the week. Did my best to kind of keep Discord updated, leading into the weekend and whatnot as we had that drop. But a lot of reasons to be looking higher now. So right now, as far as Bitcoin goes, I believe we may be working on I've got this 1 right here. So basically a 1, 2, 3, 4, 5 is like this leading diagonal type thing. I'm just going to show you here. There we go. And of course, excuse me. And of course, there we go, right? And then it led into this descending broadening wedge, which then we had this target right here of about $2,271 above the point of breakout, which we reached. So we're making money here, guys, over in Discord, right? We've got all this thing setting up. I have this wave 5 target up here around 52,647. Now there's something else I was looking at. So I've been looking at this, right? And this gives us a wave parentheses 3 target up here, minimum expected up here, 59,377, right? The other thing maybe that we might have going here is maybe we've got a 1, 2, and then maybe we've got a 1, 2, 3, 4, 5. So we've got a 1, 2, 1, 2 here, okay? And if that's the case, then this would be one right here. Let me make sure. Let me see. That's a 49,783 right there. 49,782.44. So yeah, definitely a higher one right here. So everything's fine. And so if this is a 1, 2, 1, 2, well then we've got a 1, 2, 3 up here around 52,996. And that gives us a 5. Now, this one looks kind of interesting because it gives us a 5 up here just above the EQ of this structure. So you see we have this demand structure here. Price dropped on through it, came up. As I tell you about, this is what usually happens. It'll drop through it hard, come up, get rejected in the EQ area, and fall back down, right? So in this case, we would have this push up into it to get us, 5 up. That's that 2 up there around 54,344. And then it pulled back, so that would be a 1, 2, and then we got a, 1, 2, and then 1, and it'll pull back for 2, 3, 4, 5. Anyway, and that'll give us a larger expected wave, parentheses 3 here, right? Because what we'd have here is 1, 2, 1, and then we get a 2. Now, what's important for me if I'm looking at this is that the pullback, because we're breaking out above this 1 hour pivot, it's that the pivot remains supportive, right? So what generally happens is when you break out above the pivot like this, you usually target the R1 pivot, and then you pull back, and then you head up higher, okay? In this case right here, we would just be kind of targeting this area right up here. But again, if this is a 1, 2, and then this is a 1, we get a 38.2 on that pullback, or a 50% pullback right there around the pivot, and that makes a lot of sense for me. This is something I would look for. We break out above it, we come back, we test it, and then we break out higher. So in this case, this second 1, 2 here, this interior, this part of this wave parentheses 3 here, is we get like a 1 and a 2. So that would give us a wave parentheses 3 target up here at the R2 pivot, right up here around 67,400. Okay? So we may have that going, or like I said, we may have what we currently have, which is where we're looking at a 1, 2, and then we'll get a 1 up here, so this 5 up around 52,647. So the big thing to understand right here is we're looking for a rejection in this area here that takes price down to the pivot, and a reversal off that pivot that takes us up. So, if you're long, it might be worth just holding on the rejection in this area to get to the pivot here and get the next move up, because that'll tell us a lot more depending on if it gets right here at 52,647 or it gets closer to 54,324. It'll tell us which one of those is more likely to be in play. And then you can kind of trade accordingly there. A lot of traders, guys, new traders, what I find is that they're trying to get in and out so often because they think, they want to make all this money, right? And the problem is when you come to a situation like this where you can have one or the other, they'll just think in terms of one and they'll sell, and then they'll end up regretting it later because something different happens, and then they're confused, and because, like they'll sell right here, but it goes up here, right? It goes to that secondary target. And then they'll get all upset that they didn't lock in this profit here too. So, if you're that type of person, you might just, be better off just kind of holding and waiting to see if you get that pullback down there toward there. Let me see here. Oh my gosh, let me see what's up here. What's up, Keith? Good to see you. Blaze checking in. Andrew Bennett here as well. Claudio, what's up, man? Daniel Mendez, what's up, buddy? Love the content. Hey, man, appreciate that. Thank you so much. So yeah, again, guys, I think the problem, guys, I've done this for, God, I love saying this, and at the same time I hate saying it because makes me sound so old. I don't feel as old as I am. But I've been doing this for, a quarter of a century now, right? And the one thing I've picked up is that Elliott wave is best used for understanding overall trends. People tend to want to get Elliott wave because they think, oh my God, if I learn Elliott wave, it'll tell me exactly where price is going to go all the time. And, and sometimes it does, or it tells you close to it, right? But a lot of times you're going to read it wrong, especially at first. And so if you instead understand it as a better way to understand the trend, right? So here's the keys to trading, guys. You guys listening? Here's the keys to trading. Okay, let me get rid of this idiot first. There they go. They're gone. What's going on, Chris Day? Good to see you, man. So here's the keys to trading, guys. Here's the real secret. You guys are out there all the time, and you're looking for that magic system, right? You're looking for that golden cup, that just the thing, right? The secret sauce, the thing that you can do, which you think is a way to trade, in which you can be correct all the time and make all this money, right? The reality of trading is that secret sauce that you're looking for is what I'm about to tell you, okay? It is one, risk management, proper risk management. That is the key to success in trading. It's not Elliott wave, it's not Wyckoff, it's not supply and demand, it's not pivots, it's not VPVR, it's not indicators, it is proper risk management. That's the key, okay? Now beyond that, it's understanding the trend. What is the trend, okay? Because the key to being a successful trader over time is just to consistently lock in profit. And the way you consistently lock in profit is not by trying to always buy the bottom and sell the top. You're going to lose money trying to do that, guys. The key is to identify the trend, jump into it, ride it for a bit, lock in profits, rinse and repeat. That's what it is. So if you, that right there, guys, that is the secret to trading. Honestly, it's consistently locking in profit, and then that way time and compounding does what you want it to, which is it builds your account. So, it's proper risk management and it's trend identification, right? And then locking in profits consistently. So trend identification, using Elliott wave on a little bit larger time frame, helps you understand that trend. And then all you have to do is understand how to get into it, get back out of it. You're not trying to buy this here. Trying to buy this here meant that you bought here and probably lost money. It meant that you bought over here and probably lost some money. It meant that you then didn't buy down here and it goes up, right? Don't worry about the absolute lows and the absolute highs. All you need to worry about is getting confirmation. Confirmation that a trend is beginning or a trend is reversed, and then you can jump in, and then you ride it for a bit, and don't worry about selling it, up here at this point. Don't worry about that. You just want to get into this. This is the trend going up here. If you can get in here and sell here, you made profit there. You didn't get caught in this. This is coming down. If you can sell here, or sell here on the breakdown below the swing low there, and lock in profits in this area, it doesn't matter that you don't get it here. It's that middle of the trend that you just got to lock in the profits consistently on that. Learning how to do Elliott wave, learning how to do Wyckoff wave, these are great things. These help you, but they aren't the end-all be-all. The end-all be-all is proper risk management and everything I just said there. These other things are just the tools that help you. But if you don't have that other bit down, if you don't understand that other bit that I just said, the real secret sauce, this is how you make money as a trader. If you don't understand and, take that in, then learning this is not going to help you any. Okay? It's not going to help you any. Because you're going to do this and you're going to know how to do this, but everything else, your emotion, your impulsiveness, all this stuff is going to cause you to not listen to this, to not do this properly. Okay? Remember, it was said a long time ago by Mr. Livermore himself. It was said that if you're anticipating the market, in other words, if you think the market's going to do something, so you jump in because you think it's going to do something, then you're gambling. If you wait for confirmations, then you're speculating. You want to be a speculator, not a gambler. Most gamblers lose money, guys. Okay? You're not that good. I'm going to tell you right now, you're not. And it's not a put down, it's just life. It is what it is. You have to understand and be honest with yourself about what's going on. Too many traders today, most of them, the new traders that come in, they're not honest with themselves. I see it all the time. I talk to you guys all the time. And that's what holds you back. You got to be honest with yourself. Jello Man, what's up? Andrew says, are we looking at a bull div on the daily Bitcoin? Let's check it out here. Bullish divergence on the daily? I don't have any bullish divergence on the daily anywhere, no. I mean, I guess you're probably looking at this here. Hidden bullish divergence, maybe. There's a lot of large up and down movements in here, so I'm really kind of about doing that. Let me see what 3-day maybe. I would feel better calling it a hidden bullish divergence on the 3-day here. But yeah, potentially right there, where you've got these higher lows right here. Yeah. So, yeah, I'd be looking at that. Again, all price did was dip down into this previous area of support, which was sitting on this previous area of support right here, which was kind of within, you have this area of support and then this area of support kind of halfway in it. So there's a lot of support in this area. It's no wonder. I mean, it's no surprise that you've got this huge rally back up. On this 3-day candle here, you dipped down to 42,333 and then you closed up there 49,484, right? So $7,000. You rallied back up $7,000. And so your open and close here, your open was 56.52 and then your close was 49.48. So basically your wick is longer than your body of that candle there. Demand's definitely there. But, again, it's no surprise. You've got all this here. And if we look at it, it's actually this different colored candle right here, this opposite candle, that's what caught this. It was that demand right in there. So, yeah, I mean, I think there's a lot to say about that being the bottom there, and we're heading up here. On the daily here, you can see that we've got this bullish cross and prices breaking out of oversold on Stochk RSI there. RSI itself almost closed down here, but as we talked about on the 3-day here, maybe on here, just you got these big moves here, so I'm really hesitant on a daily to call this a hidden bullish divergence. But on the 3-day it is. You see you've got the lower lows on the oscillator, higher lows on price here. So yeah, I'm liking that. Let me see here. Let me kind of catch up with you here. Charlie, what's up, man? He says, if the 1-hour pivot is lost, do you expect to reach the 4-hour wick EQ? Let me see here. The 1-hour pivot is lost. Oh, no, look. You've got a whole bunch here. Look at this. You can't say something as simple as that, and here's why. Let me get rid of all that again. If you drop through this pivot, you have all of this support right here. You have to get through all this support before you even start thinking about that. So if I was to lose the pivot, I would probably think, let me kind of pull this in here. You see this high volume node right here around 49,250 or so? That's actually where I'd be looking if we lost the pivot. That's the area I'd be looking. It's this little juncture right here. But we'd have to get through all this to make me even think about that. But yeah, if we got through all this, yeah, then I'd be looking at that EQ of this demand structure in the wick here. Yeah. But man, before that, no. I wouldn't say just because you lost the pivot that it's going down there. Again, you've got all this over here that you've got to get through first. I'm not saying it won't, but I'm just saying if you're looking at it, don't skip over the fact that you've got all this support here, the high volume node right there. Let me see here. What's going on, Jello Man? Just in time, what's up? He says, the less you're in a hurry to make money, the easier it is to make money faster. Man, oh man, well said. Exactly. Which is counterintuitive, right? When you first come into trading, guys, you're always thinking about, well, I've got this smaller bit of money. How do I turn this $100 or $1,000 into $5 million, right? As fast as possible. That's what we're always thinking. But that's not the way to do it. If you do that, you're all but guaranteed to lose your money. Take your time. Look for confirmations. Take the higher confidence trades. Don't jump in just to jump in. Don't jump in FOMO. Don't jump in because you're nervous. Don't jump in because you're bored. These are all the things you do, right? Think about it, guys. Be honest with yourself. These are all the things you do. And don't do them. Because those are things that are going to lose you money. If you're not keeping a trade journal, you guys should be keeping a trade journal, right? Because what that does, especially if you're brand new, or if you've been trading a while and you find yourself in this rut where you're losing a lot more than you want to, keep the trade journal. Because what it's going to do is it allows you to at the time you make the trade, to place the trade, that you write in all your thoughts, right? This is why you're doing it. This is what you were looking for. This is what you're expecting. This is how you were understanding it. Your entry, your exit, your stop loss, all that stuff, right? So what you can do is you go back into that later once things have moved on, right? And you've cooled off from whatever was going on then. Because a lot of times, especially if you're new, you're going to be trading in emotionally. And you'll look back and go, what was I thinking? No, that doesn't make any sense. Or I can see, oh man, I was really kind of emotional there. And the reason you do that is because you're going to lie to yourself otherwise. If you tell yourself stuff in your head, like you say, okay, yeah, I'm going to put my stop loss there, or I'm going to get out of this trade if it goes to this certain area. Well, the problem is it's going to get to that area and you're not going to do it. Most of the time you're not. But if you write it down, if you write things down and you read them, psychologically, it does this thing to you mentally where you actually pay more attention, where you actually do those things, more likely to do those things. Okay? So it's really important, especially if you're just normally, most of us are generally impulsive by nature, just usually anyway. And if that is you, then you need to do something like that to make yourself accountable to your impulsivity. Impulsivity, is that even a word? I don't know. But you guys get what I'm saying, right? You want to make sure. It is so easy, guys, in life, and especially in trading, to lie to yourself, especially because trading is such a singular thing, right? You're not part of a team, so it's easy to lie to yourself. Okay? So you want to definitely, understand that you're doing these things. You want to be honest with yourself about it. Because then once you do, again, that allows you to then do something differently. As long as you're not being honest with yourself and admitting it and honestly doing these things, you're not going to change what you're doing. But your goal is to make money, right? It's just you have to get over yourself. I tell you guys all the time, man, the biggest obstacle, the biggest hurdle you're going to face as a trader is yourself. It's your own emotion. It's your own psychology. It's not some trader on Wall Street or anybody else. It's you. That's going to be your biggest hurdle to get over. The biggest thing keeping you from making money consistently. So you've got to do the things that have been proven over time to help you get to that point. And so, again, it's overcoming these things. What's up, Boris? Good to see you, man. You like my hat? Yeah. Like I said, this is my Texas roots here. My West Texas roots. All that country life, right? Let me see here. Blaze says all crypto is speculation anyway. Well, yeah, it is speculation, but people unfortunately trade it as gambling. They treat it as gambling. For instance, if we're looking at this, right, and you're thinking about getting in right now and you think it's going to go up, so you just go ahead and enter right here. Why would you do that? That's gambling. That's anticipating that it's going to go up. If, however, you wait for a breakout above here, it doesn't guarantee that it's going to continue higher, but it makes it a lot more likely than trying to get in here. At here, it could continue going down. At least if it breaks out, now you've got confirmation that it's started to head higher, so it might continue higher. You see what I'm saying? There's the difference. Anticipating thinking it's going to do it without getting that confirmation is just gambling. And trading isn't gambling, guys. Trading is speculation, which again means you wait for the higher confidence trades. You wait for the higher confidence trades. You look for your confirmations with price action there. Okay? Let me see here. Let's see here. Who is that there? Pitch? What's going on, man? He says, what do you make of the high time frame Bitcoin chart? I see a lot of distribution chatter on Twitter. Of course you do. Everybody's scared. Everybody's scared. There's no excessive volume anywhere at the top here. And as a matter of fact, your greatest volume is coming here by a long shot here, is coming here at the bottom. Kind of similar to what was going on here, right? So distribution here leading to the sharp drop here, and you should get stair-step reaccumulation as it's moving up, is what I would expect from that. But yeah, there's no excessive kind of, like here. You see this right here? But even that was kind of this buy here. There's no real, the volume's just similar here. See this? As it's continuing to rally on up there here, there's no excessive movement up here suggesting that there's strong selling going on, that it's some kind of definitive top. Because what you'll see when there's a definitive top, you're going to see an excessive volume, right? So it's kind of like if you look at, let me see here. Look at this right here. You see how you got all this excessive volume as you rallied up here toward the top in 2017? You see how all the volume was just generally down in this area, and then you got boom, boom, getting up there? You don't see that over here. See that? The only one you had was this one over here back in January of this year, which was here. And then you've got this even larger volume, which was on the drop here, which was on the catch, right? But since that, it's dropped off here, it's gone up, right? So, no, nothing really significant coming at the top. Now, you don't have to have that, but generally it's what you're going to have, especially in Bitcoin with a cycle top. So I don't think it's screaming distribution at the moment. Just generally looking at it that way. Now things will change. Because here you have distribution here. You have reaccumulation here, right? Or accumulation here, I guess. Reaccumulation here. A bit of distribution here, which just sends it down to this previous area of reaccumulation. Huge wick up. It's a lot of demand showing up there. And then price following through to the upside. So, what you want to see, large time frame, these high time frames, you want to see a breakout above this pivot. You want to see larger candle spreads, expanding volume as you rally up through that pivot. If you get that, you're probably going to take out that all-time high and head up higher. Now, closer to where you are right now, again, we're looking at the 4 hour and the 1 hour, and here we are breaking out above it. And we're breaking out above it on higher volume here. Your volume's kind of here. You've got this rally up in volume, larger candle spreads, the breakout above the pivot. So your first thought is locally is you want to see, does that pivot hold? And if it doesn't hold, then you want to make sure that this area holds. Okay? But especially if this pivot holds and you rally up, that's a real strong indication that probably heading up higher there. I also really don't see a count that says a top would be in here, right? I see people sometimes saying A down, B up, and then C, but the problem with that is you've got 5 waves down here. How do you get, and if this is going to be an ABC up here, you're getting a flat correction here, and even that would just be a flat correction. It would just be, further pullback before it heads up higher, right? A flat correction is not the end. It's just a pause in the way, right? But even if so, how do you get, this would be A right here. This has to be 3 waves. It has to be. It can't be 1, 2, 3, 4, 5. Because wave B breaks out above wave A. So it has to be an ABC and then an ABC. How do you get an ABC out of here? I don't see that you do. And so, heading up here. By the way, you would also need a breakdown below this wave 2 here to really kind of signal. Remember what I talked about, anticipation versus speculation, right? If you're not breaking down, if you think this is an ABC here, then minimally you need to drop below this swing low right here at 39, was that 39.6? 39,600 to say, okay, well, that's 3 waves in locked up, right? Until that happens, you're just anticipating, which means you're probably going to lose money, right? But again, in order for this to be 3 up as a B, this has to be 3 down as an A, and it's 5 waves. So I don't know how you get 3 waves out of this. And I don't see anybody saying that. I just see them just putting A, and then they'll go A, B, C for B, and then they'll go down. But you can't ignore it. It has to be 3 down, 3 up. So yeah. Hank, what's up, man? Going to Thailand? Yeah, you heard about Thailand, telling the central banks over there and the banks over there not to deal with digital currencies, right? That's the news over there in Thailand right now. So yeah. Let me see here. Leighton, what's up, man? Checking in from windy and wet London, he says. Brian Allen says, all I want to do is trade with 100x leverage. But you always talk me off the ledge and teach me to be patient and keep learning. Thanks to you, I've never traded leverage, period. Yeah, that's great, man. But you guys remember, there's nothing wrong with leverage if you do it correctly. Remember, leverage, the way you guys think about it when you come in is, okay, I want to put all my money in, and then I want to use leverage of 10 times, 50 times, 100 times that, right? Well, the correct way you use leverage is you can have, let's say you're going in for $100, right? And that's all in, right? So you go on $100. So if it drops back 50%, you lost $50, right? If it goes up 50%, you make $50, right? The correct way to use leverage is, if you want to use leverage, is that you put in $50 with 2 times leverage. And there you go. It keeps the same loss win there, but you're making more money because you're making that money based on $50 instead of $100. So you're making twice as much, right? You're limiting your exposure, but you're still using the power of leverage to still get that same result. You're just limiting your exposure. It's not to go in and then make all these extra times of what you're putting in so that you think that you're going to make this big win, right? That doesn't happen for most people. So don't do that. But you can use leverage. You can put in $25 at 4 times leverage, and you're in the same spot as putting $100 with no leverage. But the key is you want to pull back how much you're putting in appropriately. If you want to do 100 times leverage, then guess what? You do $1. If you want to run your 100 times leverage, do $1 instead of $100. There you go, okay? That's how you use That's how you use leverage properly. And that way you're making money by utilizing other people's money. OPM, man, was a big thing in the 80s. Movies were made. As a matter of fact, there was a movie called Other People's Money. I believe it was Danny DeVito that was in it back in the 80s. Yeah, I'm showing my age here. It was all about corporate and rating and Wall Street and whatnot in the 80s, man. All the movies. Let me see here. Andrew Bennett says, are we still in a downward channel on the 4-hour for Bitcoin? Let's find out. Let's see here. If I'm going to draw a channel on this, if I draw a channel, my channel is going to look like this. And you say, well, that's silly, but it's not really silly because look what it does here. Look at this EQ. Look at how it finds support on the EQ and then finds resistance here and then pulls out and then it breaks out above it. And this is your channel. But better understood, it's not necessarily a channel as much as it is a, if you're looking at patterns here, kind of make this a little thicker so it's easy to see. And for all intents and purposes here, it's basically going to be something like this. It's going to be a descending, broadening wedge. Now, what does this mean? Whether you're looking at the channel or the wedge, what that means is if you're breaking out above that resistance here, you've got a pattern target based on the height of it of about 15,638. And like all good pattern targets go when you're doing these wedges and whatnot, it should take you around where it breaks down, around where the wedge starts. And so you're just a little bit above it here, a few $1,000s above it, but it usually takes you right into that area. Your pattern target should. And so it depends, maybe it takes a few days to get out there, it comes down a little bit lower, but nonetheless, that's kind of what you're looking for, pattern target there. Some people may try to come in here and do a channel like this. But you guys can already see the issue there, right? You see how you're already breaking out. 1, 2, 3. I'm not interested in that. That tells me that this isn't the real resistance that I'm looking for. The resistance I'm looking for is the one where you break out and you stay out. You break out, you maybe come back and retest it and you head up higher, but you stay out. That's what I'm looking for. So if I'm drawing a channel, this is how I'm drawing it. And as you can see, the EQ works extremely well. And so, matter of fact, I'll probably put up a little bit more there. So really, it's just that that descending, broadening wedge is really what it is. You'll get these patterns, these wedges within within that channel there that's working on. Even if you were to pull support off here in this wave 3 right here, all you have down is what we would refer, if we're using Wyckoff terminology here, it's just a spring. It's a dip down and rally right back up and close it back above it. Also known as a bear trap. And now we're back in over the EQ here of this channel thing. We're over that EQ. Anytime we go over the EQ of the channel, our next target becomes that channel resistance. We break out the channel resistance, then we've got the pattern target based on the height of the channel. So yeah. Travis Watson, what's up, man? Good to see you there. Ali is here as well. Let's see here. Jared the Great says, "Get rich slow, get poor fast." That's the way it works. Look at how much there was in terms of liquidations, right? During the beginning of this weekend when we had the drop, right? Yeah. Let me see here. Well, Zobia, what's up, man? Good to see you checking in as always. Let's see here. LXT says it's so hard to control impulses. It really is. And guys, I'm going to tell you what. It's honestly, a lot of that is not your fault these days. Ultimately we have our fault in everything that we do, right? We have our part that we play in it. But what makes it so much more difficult is because of the way society's become and all this instant gratification, right? People want things now. Again, we talk about sound bites, right? And I showed you that post from Carl Sagan back in mid-90s, where, he's talking about sound bites being, 10-second sound bites. And he noted it back then, and now it's like 2-second sound bites now. Look at how many people watch this stream. Not many people, right? And it's because, or so I'm consistently told, everybody wants to help me out. Hey, listen, if you just would make it shorter, more people would come in and watch. Well, yeah, maybe they might, but what are they going to learn? This is here to teach you something. They're not going to learn. There's nothing to learn, in 5 minutes. But that's what people want. They want somebody to come in, especially in trading. They want somebody to come in, they want them to tell them where to buy and sell, and that's all. They don't care about anything else. But then when it goes wrong, they want to blame that person. Seriously, guys. You kind of setting yourself up to lose there, right? You don't want to do that. But it's not, it's not just trading, it's everything in life. People have become so much of this, I just want to, I just want a quick thing. Nobody really wants to think. Nobody wants to apply thoughts or anything like that. Okay? Let me see here. Is that Olive Sonic? What's up? Says Miami jury rules in favor of Craig Wright, who claimed to invent Bitcoin. Definitely not a win for him, though. $100 million judgment on conversion. That's huge. That's huge. Yeah, he didn't get, they found him not guilty of the other charges, or, what do you want to find it? They didn't find him guilty for the other charges. But $100 million for conversion, though. That's huge. That's huge. But it is what it is. What a soap opera that was, right? But, again, with that happening, I'm sure they're going to appeal it, and it's going to continue to drag out. They'll probably, I don't know, Kleiman's estate might appeal the overall ruling. Wright will, I think he'll definitely appeal the $100 million. That's a lot of money. I don't care who you are. Yeah, he claims to have all these coins, but he never could produce it. He could never produce proof, right? He always had an excuse, right? It makes it very hard to believe him. And so if he doesn't have those coins, I don't know that he's got, I haven't seen anything that says he's got anywhere near $100 million liquid just sitting around. So interesting what it is. So, the best that Kleiman and them could do is to have to go to the court and have them place liens on stuff that he does own. So they've always got a claim to it. He can't sell it, right? Homes, cars, stuff like that, until he pays it off, right? So interesting times. Let me see here. You accidentally lost your pivots on TV. How to put them back on the chart? Yeah, so you just go up here to your little FX symbol up here, your indicators and strategies. Type in, pivot. And right here, it's the pivot point standard right here. And if you click that little star by it or whatever you want to click star by, they'll all show right here. All you have to do is go to your favorites, and it'll be listed with everything that you got starred in there. All right? And I use standard pivots. That's all I use on here. That's what I learned on. I've looked at the other ones. Woody, Camarillo, DeMarc, all that kind of stuff. And I know some strategies with them. I've taught some strategies with them to our Tier 3 members. But me personally, I just always use standard pivots. I've learned to use them pretty well. Let me see here. Ollie, what's up? Says, Chris, I really enjoyed last week's Elliott Wave stream. Was a reality check for me. I think Elliott Wave traders should watch it. What would be your best alternate count on Bitcoin? Well, I mean, at this point, the only thing that matters is, do we lose this swing low? So right now, big picture, I've got wave 4 up here at 59, 118 and 84 cents. If we break out above that, that should, that should be all she wrote. That should be bottoms, in right there. If we were to reverse prior to that and break down below, well, you know what? I'm not even sure we could do that. Okay. Locally, here's what we have to do. Because there was the possibility that you could have had, I first drew a bigger channel, a bigger triangle on here that went A, B, C, D, E, right? And then that would have led us to a 1, 2, 3, 4, 3 down here, 4, and then you could get a 5 lower. So if we break out above this swing high right, which is right now this wave circle 4, right? This 54, 114, 51. If you break out above that, then you can't have 5 waves going down. You've just got 1, 2, 3 here, right? Because this can't subdivide any lower once you break out above where it started, right? So then this has to be what it is then, right? So it's a 1, 2, 3, 4, 5. So if we were to reverse prior to that swing high up here, this wave circle 4, reverse and then break down below this swing, then we're probably looking at, again, the triangles all the way over here, and it's a 1, 2, 3, 4, 5. And in that case, my first target would be this S1 pivot right here, right around 41,460. That S1 on the 1 hour and 4 hour. I think it would just be that little bit drop lower. And then we'd probably rocket on back up after that. It'd be like this on steroids. Just print basically a double bottom here and take off. I don't have a bearish count on this. I don't see how there is a bearish count on it. Because coming off the lows here, I've got a 1, 2, 1, 2 here. I don't have 5 waves up. And I don't think you can get that. You've got your 1, 2 here. And even if you got this as a 3, 4, you only have 3 waves up for B here. So which is why we have B, right? We have this as a flat because it's only 3 waves up that I can tell from that. But even, and so, yeah, I mean, and this would be a really, if this was to be a top here, again, following this count here, you've got, your 3 over here, right? And so, there'd be a 3, 4, because we've got this flat here, right? For 4. So 3, 4, 5. This would be a really, really short 5 comparatively. And you would need to see a drop down below this swing low here to even really start considering that, I think. So you'd have to wait till it's getting down there below 31,259 on Coinbase here to even really consider that a top might be in there. Anything prior to that, there's too many other bullish alternatives. And I think that's the problem we get with a lot of new traders is they're just trying to be like, again, it's not about trading. It's where's the top? Where's the bottom? Where's the top? It's not about trading. That's a part of this whole tell me where to buy, tell me where to sell thing that most new traders get, right? And I'm not saying this obviously to you, not at all, not directed to you, but this just brings up a good teaching point. Again, what we often see as new traders worrying about where's the top, where's the bottom, right? What's your price prediction? What's this, that? Guys, at the end of the day, that's so little of trading because you're trading what's going on now, not what you think may happen in the big scheme of things, because there's too much that could happen prior to that. Your big idea of where a top may be or whatever is very little to do with your current trading, should have very little to do with your current trading. If your trading is based on where you think some huge top is going to be, you're doing it wrong and you're going to lose a lot more money than you need to along the way. You're going to be a lot stressed out because you're not trading what's happening. You're not trading at the time. You've just got that big thing there. And so anything that happens along the way, this kind of thing here that happens, this big drop, throws you off and really makes you sick. Right? like I said, guys, trading it's not worth it to trade if you're stressed out and upset all the time. It's really not. It should give you less stress, not more stress. To trade in there, right? And so if you are stressed out, then you have to figure out why are you stressed out. And most often it's just because you don't know what you're doing yet. And so every little thing that happens, you think, oh my God, is that it? Oh my God, I'm done, kind of idea, right? So yeah. Let me see here. What's going on, Mark? Good to see you. Man, work always getting in the way, right? Let's see here. Yeah, you're welcome, Pitch. Again, guys, I'm not here to push any kind of agenda or anything. I'm just here to tell you what I think as I'm looking at it. And nothing up there really kind of marks distribution in here for me at the moment. Now further downside, taking us below wave 2 here, then things get a little interesting, maybe a little dicey. We'll check it out if that happens. But as long as we're above wave 2, we should consider that we're probably headed higher here. Again, if you're not worried about Elliott wave and all that, what you want to look for is this descending channel resistance here, or descending wedge resistance. So that might get you up there around 55, 56,000. If you can get a breakout on that, and the breakout you're looking for is impulsive. So what you need is larger candle spreads and expanding volume on the breakout through there. If you can get that, that means this is likely the reversal confirmation right here. And you may get, it may like break out to the pivot, pull back to it, and then break up. I could see that happening. So I could see where potentially, just look at it right now that we get this breakout here, kind of hit that pivot area, pull back, retest, and then kind of head out. Actually, I'm just now looking at that. Actually, that's my wave 3 and wave 4 kind of area. Yeah. So, yeah, sometimes it's where I was blind, man. Right. But anyway, so yeah, that's kind of where we've already got the setup here. I do these on the smaller, I did these on the 15-minute time frame when I set these targets, and we can see that the wave parentheses 3 aligns with the daily pivot. Wave 4 kind of aligns with the descending channel resistance, tested as support. And you break on up out of there. So yeah, that's what I'd be looking for. Big picture, guys. If you're still concerned that it may head lower, if we get that, I think we should be good to go. Furthermore, again, if we get that breakout to the pivot, the pullback to the resistance, and then the breakout above the pivot, it's even more likely that the bottom's in and we're headed up. Yeah. Let me see here. Can I catch up with you guys here? Do I have any videos on how to trade leverage in the tier 3 group? Yeah, Brian, check out the tier 3 streams channel below the weekly educational streams channel. I've got all the links to all the ones we've done over the last year, almost a year and a half now. And I've got descriptions on them of what we taught in there. And somewhere in there is leverage. Yeah, I actually did a stream or two on leverage. Yep, sure did. So be sure to check that out. Diego, what's up, man? Good to see you checking in as always. Let's see here. Blaze says that Scott said it took him 8 months to do his taxes on crypto gains last year. Makes me cringe at the thought. It's awful, man. It really is. Crypto taxes are such a pain in the rear end because we can end up making so many trades, right? And the whole collection system with the trades is really a pain in the rear end. Now, the infrastructure bill got passed, right? And that had those crypto regulations in there. And one of them will help us out more, which is that these platforms have to give you, your crypto information, right? Your trade information, which makes it a little bit easier to track what you're doing. But man, it's still just a pain. If you've got tons and tons of trades, it's probably best just to pay a CPA to do it or something. Really is. Let's see here. ARM, what's up, man? Says they just want a quick pill. Yes, they do. Let's see here. Craig said he would not appeal, but he lies about it. Pretty much. He doesn't have a real good track record. And it sounds like we're hating on him, and maybe we are, but the reality of it is if you set yourself up to be hated on because you constantly tell falsehoods. I mean, what do you expect, right? Oh, he's something else, man, isn't he? Um, yeah. Oh, Jared the Great. Yeah, you even bring up the DeFi and the yield farming. Man, taxes on that. Oh, yeah. It's so awful the way we do it here in the U.S. Man, Puerto Rico. Man, again, I keep telling you, Puerto Rico, no crypto taxes. You can do whatever the heck you want trading crypto there and not have to worry about all that nonsense, right? It's just crazy. It's crazy. Um, Let me see here. So as far as the dollar goes, we've got this move up. It's coming here, it's nearing a breakout here of the wave circle 1, and then of course we'll have that wave 3, Roman numeral 3 up here. I can't think what it's called. Right around 96, 937 up here. So, a 938, if we break on through that opens this up, wave circle 3 target at 97.41. A lot of people still in disbelief about the dollar. It is what it is. But the dollar here, again, from a pivot standpoint, moving in sideways between the R1 and the pivot, test the pivot as support, breaks out above the swing high, which we should head higher. Daily, same idea. You're coming in sideways between it. You're testing it right here. See, testing it right here and rallying back up. So you get the breakout above this swing high here at 96.938. We should be heading up. It's just how you trade pivots. The daily, as you can see, is just now breaking out of oversold. A lot of room for it to continue to move up here. Up above that weekly. Of course, these weekly pivots will change at the end of the year. January 1st, they'll change for the next year. But right here, again, nice move up out of here. Like I said, maybe left shoulder, 2 heads, and then right shoulder here. And then you've got that right there. Remember the idea that we've got this breakout going on here. Let me see if I've got that chart real quick. Yep, there we go. So remember, we had the possible left shoulder, double head, and then right shoulder, potential inverse head and shoulders complex. Head and shoulders here, and that gives us a target up here of around 98.725. We're nearing the blue swing zone target, which is at 97.77. That's based on this area right here, this swing. And then, of course, we've got that other target there. If we take this channel here off this, which is not something I normally do, but this was interesting, off that swing high back here in December of 16 and down here in January of this year. And then the part between it there is that March 2020 area right there. You can see how that EQ does a real good job here of support and resistance. So the breakout there, maybe it might mean something. I'm not so big on this channel, but maybe you will be, right? If you're looking at this range right here, which you should be, you can notice that you've got this decline in volume until we had this rally back up right here. And so the volume came right here at the bottom. And as you rallied up, it came off, and it came down. So no real volume coming in at the top, right? We come down, but look what happens here. When we get to this bottom area here, look how the volume expands. So what it's showing you is you have demand showing up in this area, and it's sending price higher here. So whereas your volume overall is kind of doing this thing here, once we get here, all of a sudden, it's kind of picking up. And so what's important about that is that the volume is picking up at the bottom here. That usually denotes accumulation. Okay? Because you don't have, you have the volume here, which sends it up, but by the time it gets to the top, your volume's way down here. There's no supply coming in at the bottom. There's nobody trying to sell into the bottom. or to sell into the market right there, right? Which is what you would expect to see in distribution, right? See how you have up here? You see how your volume is much greater up in this area? Or if you look here, in this area up here, that volume. And so that's where you've got selling coming in. You've got selling from the big boys coming in. You don't see that over here. But you do see that your average volume here is increasing significantly in this area, which is accumulation. It's your big boys coming in and agreeing that. Remember, they can't hide their footprints. That's that volume price action analysis. They can't hide their footprints there. So my expectation is that that we continue going higher overall here with the dollar. Anything can happen. It can change. But right now, it seems to suggest that that's what's going on. So whether you're looking at the larger pictures I just showed you there with the volume and price action, or you're looking at the local picture with the patterns or the pivots, stuff like that, or even the Elliott wave count, whatever you're looking at, they all seem to suggest for higher up overall. It doesn't mean you won't get pullbacks, but seems to be saying higher up. So we'll see what happens there. Again, the effect of that is that eventually your risk-on assets start losing support. Because people start, as the dollar continues to go up higher, they start getting, that's the idea that that's a risk-off environment, right? And so when it's risk-off, people take their money out of risky assets, stocks, crypto, stuff like that. But it depends on the market you're in for when that level is hit. It's not just because, it's going up. It has to go to a certain level where people feel uncomfortable enough that they start unloading. So yeah, I saw an article that said that basically in the last year now, those that have bought Bitcoin in the last year are break even, right around break even right here. I saw another analysis on-chain metrics. Let's see here. That said that in this drop here, those people, retail, were basically taking losses. They were either liquidated or selling at a loss, that area there. And so, but this other one I was talking about, which in the last year, people are basically about even. The thing about that is that it seems to suggest that the people that are coming in are, what you call those paper hands, those weak hands, right? But not because they're trading short term, but because they're inexperienced. They came in to just buy in and watch it go up 100 times, and it's not doing that. And so that's a lot of potential supply to come in, right? And so that creates volatility. If you've got people who are willing to sell into it because they're scared or whatever, that's volatility is going to kick in. And so then you had, again, this big move here. Coming off here this weekend, right? And so that's just, again, you get the sell-off by the larger ones, right? Which then hits which starts to bring the market into, the market gets all scared, they start selling, and then it hits the liquidations and whatnot for the other market participants as well, which gives it this big cascade down. But that big old wick right there, that's buying. That's large individual buying there. So, that's them picking it up. If you're retail, you're selling into those strong hands, into those longer term holders there, the big money in general. Not just big money, but big money that knows what they're doing when it comes to trading. Of course. Let's go here. Let's see here. Let's see here. Couldn't what be truncated? Are you talking about? I don't know what could be truncated. I'm sorry, Merv. I don't understand what you're asking there. Let me see here. But you can't treat this as a huge flat correction. There's not 3 waves down. That's what I was talking about earlier. It's 5 waves down, so it's not a flat. And it has to be a flat if this is going to be a B and 3 waves up. This has to be an ABC down. But it's 1, 2, 3, 4, 5. right? Let me see here. What's my thoughts on the whole thing here? Well, it's nothing's changed. We were looking at the idea that this would follow same, usual cycles, which is maybe a blow off, but a top in December. Again, I don't see that right now. It looks like a top. It doesn't look like a top to me. So, it's the secondary. Remember, we said if it doesn't top out in December, then we're looking at maybe probably Q3, so summer of next year. End of Q2, beginning of Q3 maybe. So that's what I'm thinking right now. Unless something drastic happens here, yeah, I think that's probably what we're looking at. Yeah. Let me see here. Travis, you bought some of the Elliott Wave books the website recommends? Hey, it's great, man. If you have any questions about it, let me know, okay? If you come across something and you have any questions, those are things that I've read. Because I read a lot. Not just trading, I just read a lot in general. But so I've been through those books. So if you ever have any questions about something that's said in there that's not, maybe not so clear in the book, let me know about that. Yeah. What's going on, XRP Bandit? Good to see you, man. Jared the Great says, can you explain the volume divergence on the XPX monthly? Let me see what you got going on here, man. SPX. Oops. Let's see. I can try. Let's see what we got going on here. Right there. Where are you looking at volume? Which chart are you looking at on the SPX that you've got volume? Is there a you'll have to let me know what the ticker is you're looking at. I don't know if I've got one. Oh, wait, there we go. I got one here. That's got some volume. Okay. Let's jump up to the monthly. Let's see here. Okay, what's your question? Since 2008. So we're looking at here, excuse me, a billion more people on Earth and access to the markets has only gotten easier. Why has volume steadily declined? Because you're probably getting to a top. Again, as you most often as you get to a fifth wave, as you're doing fifth wave, your volume declines. There's not as much going into it, right? That's all. I mean, it doesn't matter that the markets are open more and whatnot. So what happened was, okay, I guess the big way to explain this is after 2008, we popped into 2010, right? And in 2010 or so was when we started getting QE. And the thought process at that time was QE. It's kind of like what people are thinking right now. QE is going to cause this massive inflation. It's going to go long term. It's going to cause hyperinflation, blah, blah, blah. And instead what we got, of course, was deflation at points, 2015, 16, almost in 2019. As we were going up there, so the Fed had trouble even getting the inflation above 1%, right? And so people were fearful. They were fearful that there was going to be this big bad situation with inflation that was going to hurt everything, send it down. So you've got that, but at the end of the day, again, it's just that there's less and less interest goes up here. And, so some people may start out here and then they'll just keep holding on with the thought that that they think it's going to be topped. And so they're not going to get in, right? Or they're going to get in sporadically. And this is the one thing I keep trying to explain to everybody is just because you have an idea of what you think the top may be or whatnot, you still have to have your validation and validation levels, which is what I've always given you guys. Yeah, it may look like the top here, but guess what? If we do this other thing and we go to this other level, well, it's not the top anymore. We continue to look for that top, right? And so, again, you got that big dip right here where you see that spike of volume right there. And then as it continues up higher there, people are scared. It's easy to buy on a large sudden dip. It's much harder to buy as it breaks and heads higher there, at least if you've got big money. Because it's more, more likely, you want to buy at the bottom, right? And then the higher it gets up, the less likely you are to buy in, right? Unless you're retail, then you just buy in right here, right? Or right here, right? Yeah. So, you can have more participants with much less participating money, right? And then overall volume can be less. So if you talk about access being easier, yeah, you've got Schwab slices, which is partial stock ownership. You've got the e-minis, the e-micro minis, and so you got more people in there, but those allow them to trade with much less money, and so you may have more participants, but significantly less money coming in overall. In that particular whatever it is that you're trading. So just different ways to look at that. Let me see here. Hank believes that CSW deserves nothing but ridicule. I'm not quite so harsh. But man, that trial was definitely like a soap opera, that's for sure. Let me see here. XRP, you don't have crypto tax in South Africa? Man, I can't even imagine how great that must be. I can't. What do I make of the November 30th candle on the DXY? Let me see here. November 30th candle. November 30th. This one? Nothing really. A, B, C. I mean, seems like it's just 3 down to me. I don't know. What are you going for, Hank? Is there something you're thinking about it? What is it exactly that you're wondering about that? The pump and then the drop back down? Well, I don't know. Where's November 30th? It's this one, right? Yeah, it was the pump and then the pullback. And then you just hit the demand here in this wick and took back off. Just about to break out. Right now we're about just above mid-range of this supply structure at the November 30th wick there. See here. Let me see here. Okay, let me see. You said, guess that is the Euro USD chart causing it. Almost stopped me out and created a swing failure pattern. So I took 35% more profit and left 30% writing. It seems to bounce now. Yeah. I mean, whatever's going on there with it. Let me see here. Load up the Euro USD chart. Let's see here. Yeah, I mean, so I'm still looking for likely further down. Still, I've got a 3 and a 4. We're looking for 5. Locally, looking for 3 of 3. Coming off that. We're below the 1 hour pivot. Trying to find support on the S1 pivot. Starting to rally up there with the Stochh RSI. Daily. We curled down, crossed bearishly, trying to break down out of overbought now. Daily, we were rejected at the daily pivot, and we're heading down. So especially if we lose that low there, we should be looking minimum S1 pivot, potentially lower, which would be in line with that count. Yeah, I don't see a lot of positive for the euro at the moment. And we'll see what happens overall. But for right now, it's just more of the same right now. Do I have my count on here? Oh, this doesn't have the full count on it. Okay, well, anyway. But yeah, just looking for a breakdown below that swing low to kind of signal that we're heading lower on down with that. So Euro USD is dropping, USD Yen is rallying. So, those two things together are just over 70% of the value, the weighted value of the DXY, right? So, yeah, that should cause it to rally overall. USD CAD recently being sent downward because of oil finally bouncing a bit. But if that's coming to an end there, then we should see that kind of continue back up. Let me see here. Oh, let me see. Oh, man. Have a great day, Mark. Let's see here. Oh, let's see. Hank's sending something. Let's see. What is Hank sending me here? Let's see. Hank is showing this count that he got from somewhere. So I can pull this up over here. Of a flat correction here. But again, with that, this has to be an ending diagonal here. And that's where I differ with whoever this count is with. You know, again, we talked about the idea that this was a flat here and heading up. So let me see here. See, and you have to make allowances. You have to give this a truncated Y wave here. See, here's the thing. Your truncations and stuff like that should always be last thought. It should always be if there's absolutely nothing else that could be going on, then you look at truncation. Truncation is such a rare phenomenon, right? Most of the time, when you see something you think is a truncation, it's not, right? But let me see here. Yeah, see, I that bothers me a lot. This whole idea of a trunk, and that's the only way you get this down. That's the only way you can even get a WXY down is to truncate it. So, you know, I'm real iffy, you know, off on that kind of thing. And then you have to get 5 up from here. It's easy to get 5 up from here as a 1 and a 2 as a flat here. You know, and then your 3, 4, you know, 5 things you're getting up there. That's easy, but when you're trying to get this 5 up, becomes a lot more sketchy. This one, of course. See, and again, and then you're looking at trying to get 5 up here to the top here. There's a whole lot of in this particular chart. There's a whole lot of I don't want to say making excuses, but there's a whole lot of well, we'll ignore this or we'll ignore that. To try and bend the rules a bit. The way I look at it, so when I'm looking at Elliott wave, I kind of look at truncations as bending the rules. And because, again, as I've said, what I've noticed most of the time is that your truncation is actually improper, right? Not every single time, but I would say probably 95% of the time, if I had to try and figure out some kind of percentage just off the top of my head, I'd probably say that. It's very rare, I think, that we get truncations. Because in my experience, I've always been able to find another count. Not always, but for most time, right? So you start with the truncation there, and then you try and you've got to finagle 5 waves out of this, and then you got to finagle another 5 waves out of this. Whereas the counts that I have them because they're easy. And most often in Elliott wave, it's the easy counts that are correct. Yeah. So, you were talking about the DXY on that candle, unusual candle for Forex pair. Well, it's just, you know, again, yes, you can do futures. It's not really a Forex pair though with DXY. You know, there is the futures that you can get on the ICE exchange here in the U.S., but you can't normally trade the DXY, right? Because it's not a Forex pair. But that particular thing was just that was the Friday news event. Right, that was the jobs info that came out Friday that caused that. Yeah, that knee-jerk reaction there. Let me see here. Let me kind of catch up with you guys. What do you think about the Bitcoin bot in? I don't even know what that is, man. I'm sorry. I don't. I have no answer for that because I don't know what that is. Let me see here. Let me see. Oh, this is Trade Devils here. If it's Trade Devil, then it's got to be just one of multiple different things they're looking at. Is this their primary? I don't know, man. again, uh, you know, in Elliott wave, it's the easiest count that's usually correct. When you have to start truncating and you know, stretching for those counts, it makes it a lot more unlikely. It doesn't mean it's incorrect, but it does make it a lot more unlikely. So yeah. They don't really have a primary. Okay, that makes sense. So this is just one of a possible, like, well, if this were to happen, then maybe we could get this out of it, but it would have to be this way. Yeah, see, that's how I would look at it. You know, like I said, if this were to kind of break down here, then okay, yeah, maybe. But this is the way it would have to be, and these are my concerns if this is the way it would have to be. You know, again, truncation, especially on that particular Y wave there, and then trying to, you know, because as we're moving up here, you know, I've tried to get the 5 waves out of here and here, and it's just so much more clean getting them the way that I've got them on there, right? It's so much easier to see. So yeah, that's all I'm looking at. I'm not saying it's wrong, but for me personally, you know, the way that I've understood, you know, that I've come to understand Elliott wave, it's just it's going to be the more simple count is usually the correct, right? So it's very easy to get a 1, 2, 3, 4, 5 here. It's very easy to get a 1 A B C, you know, a flat here. You know, to get the 5 there, that's fine because that's 3 down there, so that's good. Much easier to get 5 here than it is to get 5 here. See what I'm saying? So that's the way I look at that. Looking at that, yeah. Let's see here. So anyway, so yeah, so that's kind of my thoughts on that. Oh, what else do we have here? I thought I saw a question here. Let me see here. Has oil topped locally? Let's see here. I've got to roll, don't I? Yeah. Let's see what we got here. I think it's possible. And you know what? Actually, if I'm looking at this, I think this might be an expanded flat for wave 4 right here. And then this is 1, 2, 3, 4, 5 here. So we get the 3 over here. This becomes A, B. 1, 2, 1, 2, 3, 4, 5. So 1, 2, 3, 4, 5. I think we're topped out on oil. I think I'm going to change this count here. By the way, if you're in Discord with us and you get these kind of charts, I always give the live chart. So if you go back and look at the live chart after I've changed it, you'll get to see those updated changes in it already set for you, which is always a bit helpful, right? Something that we do that I don't know of anybody else that does that as far as for what we do. But yeah, I think what we've got here is probably an expanded fourth here, and then 1, 2, 3, 4, 5 gives us here, and then we've got A, B, C. Again, usually your B wave terminates around your pivot, so that would make sense. And then 1, 2, 1, 2, 3, 4, 5 means 1, 2, 3, 4, potentially 5. This has been our target here. That's why that green zone is there. Wave 4 targeting wave 4 of the lesser degree. Again, usually what we look for. So we'll look for a breakdown here. First clue locally would be a breakdown of this level right here. This is what? $70.90. So there we go. So we get breakdown through that. That's your first clue that wave 4 may be complete. Then you're looking for a nice impulsive breakdown through the 1 hour pivot here and wave B here at what is this? Wave B 65.60. And I'm going to throw that in there. There we go. Yeah. So if we're dropping below wave B there, that should say that wave 5 is in progress. If that top is in there, let's see. Peaked out just above that target. That should give us then a wave 5. Ah, S2 pivot. Man, I like that. I like that a lot. It's a nice target. So I give us wave 5 of what I have as 3 here. Coming off that swing high up here, right around 85, 85 and a half. I think that's maybe wave A. That's done. So we're working on this large wave B now. But yeah, looking for that move down toward that S2 pivot on the 1 hour now. So if this is coming down and the DXY is rallying up, then your USD CAD should be a good long. See here, it looks like it's starting to rally off 126.360 area. It's up about 30 pips right now. And that was from about not quite 3 hours ago. So USD CAD, that is. So yeah. I look like I need some sleep. I'm not sure how to take that. I'll put a lot of hours with TWC, but I usually don't sleep a whole lot anyway. I'm just old. I have old eyes. They sag a bit. Let me see here. Yeah, so I mean, oil, I think that's what we're kind of looking at there. Let's go ahead and pull up silver here and see where we're at with that. Oh, let's see here. Wave 4 may still be in progress here. This is just a real kind of, just a ridiculous kind of thing here. What's going on? This, what do you call this? This whole kind of sideways stuff here. But I've got a wave 4 right there at, what is that? 22,635 as the top there. I got 22.625 right now with this swing high. So basically a penny under that right now. I mean, you could get maybe a 1, 2, 3, 4, 5. So an A, B, and a C maybe. Just a really deep wave 2. And so in that case, what we're looking for is a breakdown below this swing low. This would be your wave B here. Whoops. Right here. Remember, anticipation versus speculation, folks. 22.23. Oh, there it is. Perfect. So if we can get a breakdown below that, 1, 2 maybe. Then that should tell us, okay, this is an ABC here, and we're done, and we're heading lower in wave. Right now I've got that as wave 5 of 3, as you see there. So if we just kind of throw this in here, as long as this continues down from where it's at, it's pulling back locally. You know, we're pretty high up here. The 1 hour, what's that 15-minute look? 15-minute looks like it might have some more room. What's that 4-hour look? 4 hour might still, it might still have more. We might have to change this count a bit. It'll be invalidated if it pops up above that wave circle 4 there. We are down here and oversold on Stochastic RSI. RSI itself hasn't dipped down and oversold yet, so there's room that it could go down there if it's going to. As far as the daily goes, you know, we've come in sideways between the pivot and the S1. And so, you know, if it does rally up, you kind of want to see the best case scenario, if you're looking for further down in silver, would be a rejection in that pivot area and then a breakdown below that swing low, and that should carry it below the swing low there and continue to move down. But as far as what we're looking at here, if that top stays and we get the breakdown right there, then that gives us a potential wave 3 right here at 21,805. and then that gives us a 5 down here at 2161, which is just below where I'm looking at wave 5 at 21.675. So it's right in that same area. If it falls through, where you kind of reach the targets that you're looking for, the generally expected targets. And so then that would give us a 5 like in that area. Wave 4 has room to continue up. I just don't know how you get this as still wave 4 here. Maybe it's possible you can get maybe we can get wave 4 over here, and then wave circle 5 parentheses or Roman numeral 3 down here, and then we've got an A, a B, and then we've got a 1, 2, 3, 4. We get a little bit higher up here on 5 as this wave 4, but then you don't want it to break into this wave 1 here, which is at 22.705. So we'd need to stop prior to that. Yeah. So overall, whether it's the wave circle 4 or the wave, this kind of wave 4 here, I've got it over. I just pull that out of the way there. You want it to end prior to 22.705. That keeps it below this wave 1 here, wave Roman numeral 1. You don't want it breaking up into that. So that's what I'm looking at as far as that goes. But we'll see if we can get this continue fall back down here and kind of get these targets we're looking at with that maybe. Let me see here. Alexi, you're welcome. Let me see here. Jared says, so to the SPX volume, what have these larger entities been doing with their capital for the last 13 years if they aren't buying stock? Buying crypto? I don't know. Well, the SPX isn't the only stock market out there, right? We see that people are buying heavily into tech stocks. Tech stocks are dominating on the NASDAQ, right? So money outflows, I haven't looked. Maybe there's money outflows from SPX into NASDAQ, into the tech companies there in the NASDAQ. Yeah. So, yeah, possibly that going on there. That's probably what I'd look at. See if it's really kind of jumping into those larger tech names that are in the NASDAQ, maybe. Yeah. But I know, right? That's the other thing. Thank you for bringing that up, Hank. Emerging economies. Yeah, if it's risk on, larger money tends to go into emerging economies. So, that's where the money could also be headed. So if we look at emerging economies, we look at, Tesla and others that are in the NASDAQ, those large tech stocks. And then we look also at crypto. I mean, there's lots of places for money to go other than the SPX, right? Yeah. See, I really don't worry a whole lot about that. I just trade charts, right? Because the thing is, if you're looking the other way, you're looking for narratives. You're trying to create narratives, and that can cause you a lot of bias, a lot of sticking to it no matter what kind of thing. We're all just human beings, guys. Even those of us that have been doing this a very long time, we're still human beings. We're still prone to biases and whatnot. So, that could always happen there. So I don't really tend to worry a whole lot about that. I just find charts and trade them. And that way I'm just trading what's going on currently. Not so much worried about long term. Not really, especially, right now with the possibility that we may be at a top, near a top, whatever. A really complex, a very long-term top, right? For me, there's very little reason to be thinking 10 years out from here at anything other than potentially down. Because here's the worst case scenario for me, thinking that way, is that, thinking the way I do right now, is that stocks continue to increase in price, right? So since I'm trading it locally, I'm making money anyway. If you're thinking stocks are going to just be kind of blasting ahead for the next 5 or 10 years, and that's what you're investing or trading based on, and the opposite happens, you're screwed, right? If you think maybe the opposite might be happening or might be gearing up to happen, but you're still trading locally, then even if what you're thinking may happen doesn't happen, you're still trading locally, so you're still making money. And I think that's honestly the best way to look at markets in general. Unless you're at the bottom of some huge recession or depression or something like that. Unless you're buying, in 2009 and Q2 of 2009 or Q3 of 2009. You can buy there and think longer term up. Here we are now 12 years later, right? But right now, with everything where it is and things so stressed out, why would you buy right now, invest right now for 10 years out when there's a real good possibility that the top could be in or coming near as some sort of huge downturn, right? Doesn't mean you can't trade locally. That's the good thing. You trade locally, you still make money. And if it continues going up, you still trade locally, you're still making money. But if you lock yourself into that idea that that this is just like 1920s right now and things are going to go up to 2030 like they did leading up into the Great Depression, you're going to have this great decade. It doesn't work. If it doesn't work out that way, you're kind of screwed, right? You might become a holder of, it might take it 50 years or 100 years to get back to where it is currently. And I say that in terms of the idea that maybe this is a very, as I've continued to talk about, a very large, a major correction, right? Something that could go sideways for 50 years or more. Most of us don't have the time to buy at the top right now and hold through 50 years of a down market, right? Down and sideways, right? Before it finally breaks out to a new all-time high. So, yeah. Armands, what's up, man? Let me see here. Jared the Great, you were speaking to it in terms of using it as evidence of a top. Yeah, I mean, again, if the SPX is going up and the volume's dropping off, that's usually indicative of, that's indicative of less involvement, right? Less interest in buying it as it's heading higher, right? And that's usually what happens in wave 5s, right? Most of the time, the wave 3 is your largest volume. Wave 5 is less. You have wave 1, volume goes up, comes back down. Wave 3, volume goes up higher, comes back down. And then wave 5 volume is lesser than wave 3. And yeah, so you've got that, this being a wave 5, you would expect volume to die off like that. Hex USDC, huh? That's what we got here. That's so ugly. That lack of volume coming in there making this just so ugly on the charts. Let's see, is this a swing low right here? 229056. 23, yeah. So I guess it's a 1, 2, 3, 4, 5 maybe. Yeah, so I mean, to me, it looks like this might be a top up here. It looks like this might be 5 waves up. Let me see here. I hate that they make those things so big. Makes it difficult to use them here. Let's see here. That looks like a 1, 2 right there. It's like a 1, 2 right here. Let me see here. May have a 1, 2, 3, 4, 5. Maybe. Let me see how this turns out here. Take that one down. There we go. Let's see. 3. Darn it. 4. 5. So 3, 4, 5, 3, 4. Yeah, I think we got 5 up on that. Just kind of eyeballing this real quick. Gotta pull it down 23.6. Let's see here. We're going to have demand sitting right in this area right here. And let's see here. So it looks like it may have like a 1, 2, and then a 1, 2, 3, 4, 5. So 3, 4, and a 5. So maybe an A, and then a B, and then a C coming down here. We generally look for wave 2 to reach wave 4, the lesser degree. So generally, our initial target is going to be wave 2, right kind of in this area, at this wave 4. Let me see what we got here. Now it's possible, as I'm looking at this, that this can be A, this will be B, and then we're working on C here again. Might bounce out of this area here. A breakout, I would say above that. That's probably B if I'm looking at it correctly here. Dang it, hit the wrong one again. There we go. Yeah, I think we might be heading down toward maybe this kind of EQ area here, maybe. But we could bounce off that S1, and we'll look for breakout above the pivot, and then it's the breakout above this level right here at 281,427. Let's see here, 281,42717. Kind of that area is where I'm interested in seeing a breakout happen. I think if we get above that, wave 2 might be complete. We had wave 3. But yeah, if looking in this area right here, I don't think we're going to get down that far there. We could, but I don't think we're going to get down to the wave parentheses 4 there. So yeah, I'll be looking for a rally back up above that 0.28142717 kind of area. Breakout above that. And at that point, you know, again, you're going to want to look for 5 waves up, taking out this top here. and then that should give you more confidence. So depending on where it actually finishes, let's say it gets down there to the EQ. 0.92, what is that? 85039,104 is that wave 3. That kind of area is where wave 3 would end up then. Make it down there. That's how I'd look at it. So yeah, you know, as always, you know, it's about confirmations, not anticipation, guys, right? We've got that now, right? We're all on that same kind of boat now, right? Let's see here. Love channels, guys. If you aren't using channels on a daily basis, you are shortchanging your trading, man. Channels tell you so much. It's a decent area of support and resistance. Yeah, I mean, locally, I'd look for a breakout of this descending channel resistance here. And as long as it, you know, it may be able to pop out and come back and retest and continue up. As long as it remains above it, though, that's a good clue that that bottom may be in. So work with that. That might give you a little bit extra to kind of understand what's going on with that price action in there. It's a pretty decent area, though, as far as that support resistance goes on that EQ. Let's see here. What's going on, Silvio? Always good to see you, man. See, could I take a look at a Norwegian stock? KAHOT. Yeah, I've got a little bit of time here. Kahoot. You said which one? Norwegian? Let's see here. Or Kahoot, not Kahoot. It is Kahoot, though. Let's see here. I mean, I think we've probably got a 1-2 here, which makes this probably a 1-2. Zoom in a little bit. Looks like maybe we've got an A, B, 1, 2, 3, 4, 5 kind of thing coming down there. How far have we retraced here? Get in there. Yeah, right around. Just above 78.6. You're getting a nice wick on that demand, a nice demand wick there. S1 pivot is holding up as support. So if you can see an impulsive breakout above that pivot, that you know, that'd be the first clue that this is potentially done here. What is this? 36.28. 36.28. It's low there. Get in the daily here. Yeah, look at that nice on the daily here. Look at that bullish cross here and oversold. Trying to get near breaking out of oversold there. You got bullish divergence kind of building up here. So yeah, I'd be looking at an impulsive breakout above that daily pivot to kind of suggest that that bottom may be in. So, 2. If that's the bottom right there, then wave 3 should get you a minimum of 106.38 kind of area. That gives you a wave 5 up here, 121.24 a minimum expected. And so that gets you up there around the top of that. And as always, you know, your first subwave usually reaches your previous swing high there. So that's kind of where I'd be looking at it. I definitely want to see a breakout above the daily pivot, preferably an impulsive breakout. And we really want to carry it above this initial swing high here. So you really want to see a breakout above 54.46. Because it's not just above the pivot, but above the swing high prior to the pivot. And that's what you kind of want to see, that breakout from there. Yeah, because you got a 1, 2, 3, 4, 5. 1, 2, 1, 2, 3, 4, 5. 3, 4, 5. So there's A, B, C. Up here is B. And then 1, 2, 3, 4, 5. Looks like C right there. But again, if you enter long right now, you're anticipating, and that's likely to lose you money. If you wait for a breakout, though, that's trading, right? That's speculation, right? Look at how nice that EQ works up here. Support. Breakout of this channel here gives you a target of about $15 above the point of breakout. And as any good pattern target is, it takes you right up about where it starts, you see? So I was talking about earlier in the stream. So yeah, probably looking all right. Again, you got that bullish divergence kind of setting up here on the 1 hour, or the 1 day, I'm sorry. Going to get this set so it's not showing up on all the different time frames. Oops. 1 day. There we go. And you got that curl and that want to break out there. Yeah, it doesn't look terrible to me. It looks pretty good. Definitely want to get the confirmations as always though, but currently the setup looks all right. Looks like it may be set up for a good move there. You're welcome. You're welcome. Bitcoin Anarchist, what's up, buddy? Late night Australia there. How are you guys doing with COVID, man? I hope things are going well. I've heard scary stories, though, man. At least for the unvaccinated over there, right? What's going on, Tail? Good to see you checking in, man. Yeah, Hank says a lot of alts looking a lot stronger than Bitcoin. So you can also look, again, we talked about earlier about Matic, right? Matic's looking pretty sharp right now. We've got accumulation here. We've got distribution and reaccumulation. So this is a reaccumulation after decline is what this is called here. Nice breakout there. Wave 5. Expected to be right there around 13749 kind of area. Kind of where I'm looking for wave 5 to get to. Let me look at it this way too real quick. Oh, wrong one. Yeah, like that. So that's what I'm kind of looking at there. Yeah, the weekly you see is getting up toward that. So, but this is a nice move out here. Like I said, I think that's probably due to that. What was it? Sequoia Capital India and Steadview Capital. Let me see here. They're looking to make an investment through the purchase of Matic tokens for Polygon. So TechCrunch was reporting that. Let me see here. Yeah, so yeah, that might be explaining what's going on here leading up to this. So, of course, they're not responding to, requests for comments. Of course. COVID is not a problem. Parasite rulers are the problem. Yeah. No, what I meant was not that COVID was a problem, just that I saw a lot of really, me being the more of the what do you call it? I'm not a big believer in centralized power because of things that tend to happen with that, right? So, yeah, for the unvaccinated, that's looking kind of not so great over there for them. But hopefully you're doing all right over there. But yeah, I think Hank's right. These Bitcoin pairs are looking pretty decent. Leighton says that Luna looks beautiful. I don't know if he means Luna Bitcoin or Luna USD. But yeah, so yeah, again, guys, the important thing is just to trade, with confirmations, not just kind of jumping in there just because, or jumping in there trying to anticipate movement, because that's going to get you to lose money more than not. Okay? The goal is to get in there. You look for higher confidence trades. Look for ones that make sense. For instance, you've got this move down here, which bounced right off the EQ here of my green demand structure, right? Right off, boom, boom, right there. It breaks out of this wedge. If you need a time to go long, you do that. Right off that wedge, right? That breakout there, and then you've got you a $2,270 profit on the way up there, right? You don't have to get this or whatever, or even this down here. If you constantly do something like this, you're going to be so much further ahead than you've ever been as a trader, guys. If you've been trading for a year or 2 years or 3 years and you are just not consistently profitable, I'm telling you, change the way you think. I can almost guarantee that you're thinking, how do you buy this? You're always trying to buy this, and you're always trying to sell this, right? And I'm going to tell you what, that's going to lead, that's a large part of the problems that you're going to have as a trader. Okay, guys? Concentrate on looking for, once the trend's established, look for your entries, your higher confidence entries. Breaks out of patterns, bullish divergences or bearish divergences if you're selling. And then just, take some of that and lock in the profit and then do it again. And if you do that, if you repeat that, guys, you're going to get where you want to get a lot more likely than if you're always trying to buy the bottom and sell the top. Those of us that trade, professionally, we do it for a living, we rarely get these bottoms and tops, guys, and we don't really look for it. Sometimes it screams at you that's a bottom. A lot of times it doesn't, though. And, we're looking for higher confidence trades, the ones that are more likely to work out. Okay? Okay, guys. I hope you guys have a great day. Thank you so much for joining as always. We'd love to have you. You can join us at howtotradetowin.com. Well over 150 hours of educational video content, guys. It's as close as you can get to a mentorship for trading. Than just about anywhere else. I do everything I can to help, our members really kind of do their best at trading, because to me, that's important. That reflects well on me, right? But at the end of the day, guys, here's the thing. Myself or anybody else, that does this, we can't guarantee that you're going to do anything, because it's up to you to actually do the work, okay? I always say you can lead a horse to water, but you can't make them drink, right? I can give you all the information in the world. I can tell you what you need to do and how to do it. But until you go do it and you listen to it and you do what you're told, how you're told to do it, unless you're doing that, you're not going to get anything out of it. So if you do decide to join us, just make sure you're really ready to learn. Make sure you're really ready to jump in there and tackle all this education. There's so much that you can learn about Elliott Wave, Wyckoff, or just about anything else as far as trading goes. Or macroeconomics, global financial interactions, stuff like that. I talk about all that stuff. I always try to explain it as well, or give you links to other explanations and more stuff going on. So anyway, there you go. We'd love to have you there. If not, or even if I do, hopefully I see you guys on Friday, 11 a.m. Central Standard Time, okay? If you do celebrate Christmas, I hope you've got your shopping done. I'm working on it. It's coming up quick. I hope you guys have an amazing week. As always, remember, the only thing you control in the market is how much you lose. That's it, okay? That's it. So that's where you make your money. So risk management is what it's all about, okay? You guys have a great day, a great week, and I will see y'all later. Take care.